Well, good evening, everybody. Welcome back to Strongman Personal Finance. I found a company that is minting new millionaires every day. And yes, this is a sponsored video. There was a guy giving me like 50, 60 bucks in super chats, and I promised him I'd make a sponsored video. And he wanted me to cover this crazy stock. What is it? Are you excited? Let's go. So this company is called JDE Peet in.v from the Netherlands. Currency in euros. Watch that. That's actually very important. What does JDE Peet do? Well, together with its subsidiaries, it provides various coffee and tea products worldwide. It operates in LARMEA, APAC, Europe, and Peet segments. The company sells its products under the L'OR, Peet's, Jacobs, Sensio, Tassimo, blah, 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 brand names. This is a coffee company, guys, based in the Netherlands with their wooden shoes, yeah. Okay. So, of course, this is a typical European stock. You know, most of the tech and the exciting vertical line stocks are all in the United States. When you go look at Europe, you see companies like this that sell coffee and tea, okay? Now, over the past 5 years, the stock has not done well. It's down 51%. 51% in 5 years. Now, it pays a dividend, and remember, dividends drop the stock price. So this is not the whole story, but it has dropped pretty significantly. I believe this is the max chart, right? So the company's selling off, and it's probably for a host of reasons. Number one, when you're a U.S. investor and you invest in international companies and you're not hedged, you're exposed to foreign currencies. It can be a hedge, but it can also hurt you, okay? Now, if you don't know what's going on with the dollar, basically the dollar is very freaking strong, okay? For a host of reasons, I'm not a currency expert, but one of the reasons is that U.S. treasuries are paying good money, and people want to buy them, so they're buying in dollars to buy U.S. treasuries. And the higher our rates go, the stronger it helps the dollar. But there's a host of other reasons why the dollar is strong. Like I said, I'm not a currency expert. But the problem is when we have basically a bull market in the dollar, and you invest in a company that has earnings in euros, well, those euros, when converted to dollars, buy less and less dollars over time. Now, if the dollar started weakening, the dollar lost strength, which I imagine we want to do if we want to be a manufacturing center of the world. You want a weak currency, okay? Anyway, if the dollar started to weaken in the future and it goes into some kind of bear market, well, suddenly those euros buy more and more when converted are more and more dollars. So when you invest in a global index like I do, currency is part of it. You have to factor that in. You have to be aware of that, okay? So part of the reason this company ain't looking too hot, at least from our perspective here in America, is because of the dollar strength. It's actually a big influence on total international returns. It can go both ways, just like your mom. So the stock is sold off 51%, okay? But it has a dividend, so the total return is probably higher than 51%. Let's look at the financials. So euros are weird. They have annual and semi-annual reports, and I'm not a European accountant. I mean, I'm European by blood, but I'm not a European accountant, okay? I understand their financial statements, but they're a little weird. They have different standards of accounting. So we can see their revenue has grown decently, okay? There's been inflation in the Eurozone. It's not just in the United States. So their revenue has grown a little bit, but it's not like shockingly good revenue. It's a very mature company that's probably just barely keeping up with inflation. Maybe beating inflation a little bit when it comes to a revenue perspective. Gross profit is thankfully increasing. Operating income, if it pops up, is basically flat. Okay. Now you can have flat operating income, but if they're buying back shares, you get more and more of the earnings. So let's see what they're doing with shares. Well, they're not really buying back shares that much. They actually had a huge offering in 2021. So their share count, they're not really buying back shares. Their earnings per share is going down. Their dividend per share is the same. Okay, so it pays a dividend. And their free cash flow per share is trending down. So this is the past, obviously. In the future, things could change. But this is a very mature business that's kind of struggling. At least it was historically. Now, if we look at margins, they're having margin contraction. Their gross margin, this is their profit from the coffee and tea before any other expenses, is going down. Operating margins have fallen. And profit margins are basically flat since 2021. So you're not really seeing any earnings growth. You're not really seeing any free cash flow growth. And when you combine that with the strong dollar, this is going to be a low PE company. Okay, but that doesn't mean it's cheap. It's cheap for a reason. It's a very mature company. Let's look at the ratios. All right, so the PE is 15. The forward PE is 10. Oh my God. But just because the forward PE is low doesn't mean it's cheap. It's not growing. It's actually contracting. Their margins are contracting. Their revenue's barely keeping up with inflation. Ain't that hot. It's also selling below book value. Wow. Now, I don't know if that's tangible book value. Do they have that on here? But this thing is trading below book value. So theoretically, you could buy the company, the book value of the company, at a discount if you acquired the entire company. But all the metrics are cheap. Very, very, very cheap. Very, very, very cheap. Duh. It's a freaking mature company. So overall, they're not really buying back shares. They're paying an okay dividend. But when you factor in the share price decline, your total return would probably be negative over the last 5 years. Okay. So when this thing is a buy, I don't freaking know. Okay. Now you see the dividend yields going up. Why is the dividend yield going up? Because the stock price is going down. A high dividend yield isn't always amazing. It could be an indicator that the stock price is dropping. Go look at Walgreens. What's the market cap of this? 8.2 billion. Yeah. I don't know what's the play with this? You just look, is it just cheap? I don't know. Is there something coming in the future? Are they going to innovate and launch a new brand of coffee that's going to massively explode sales? I don't know. So this is their most recent half-year results that I could find. So organic sales are up 3.6%, probably trailing inflation. Partially driven by price increases and a little bit of volume growth. So volume growth, 1.2% growth. Okay. I don't know why they distinguish organic sales and reported sales. Let's see. Blah, blah, blah. Let's go look at the balance sheet. I want to see the weird European balance sheet. But before we do that, let's see. So this is sales growth. So most of their sales growth is a percentage, at least, is from LARMEA. I don't know what region of the world that is. Brazil, Latin America. Okay, so they're growing sales in Latin America. I guess that's the bull case. Everything else is basically barely keeping up with inflation. God, these European statements, man. They kill me. Okay, we already saw the profit and loss. All right, let's look at the balance sheet here. Oh my God. So goodwill and other intangible assets is 17 billion on the balance sheet. Their total assets are 23 billion. Goodwill is when you acquire a company for more than the fair value of the net assets. Okay. So the vast majority of this company's assets are intangible. An intangible asset is like a patent, a trademark. You've spent money on it, but you have to spread the cost over time. You have to amortize it. And it comes from acquisitions. You acquire another company, but you pay more than the fair value of the assets, of the net assets. You have to, basically, the plug is goodwill. So a huge portion of this company's assets are intangible. So when you see, oh, it's trading below book value. Yeah, because most of it's probably in goodwill. Okay, we'll see what the note says. I mean, the next largest asset is property, plant, equipment at 1.8 billion. Yeah, 1.8 billion euro. This is all in euros, by the way. So that's actually a little terrifying in my personal opinion. They got $1.2 billion of cash on hand. What are their current debts? 5.8 billion of current debts versus 3.6 billion of current assets. Okay. So they have fewer current assets that can be converted to cash within a year than they have current debts. Let's look at their long-term debt. Okay, they have 5 billion of debt, long-term debt, and then there's deferred income tax liabilities. That could always change based off tax law. So they have a lot of debt relative to their assets. Okay, they have more debt, long-term debt, than they do property, plant, and equipment. Let's look at their, what do they have? Yeah, most of their short-term debt's in like payables, like buying inventory, probably stuff like that. I mean, this is not a good balance sheet. Let's see what the note 11 is. I want to see what those. What? Where's the note? Assets that are blah, 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 blah. Okay, are they impairing goodwill? Well, how much of it is goodwill? They don't even break it out. Look, the balance sheet's not that great. Don't be sucked in by the below book value. That's actually kind of a fake metric because most of the book value is freaking intangible assets, declining margins, revenue barely keeping up with inflation. I don't know what the bull case is except for Latin America, if that's what that was. I mean, this is just a standard. I mean, you could probably buy a treasury and make more money. I'm just saying. So I don't know. Maybe if you're in the comments, you can tell me what the bull case is. But yeah, that's probably not something I would buy. Maybe if it was $1, I'd consider it. Book a free tax consultation. I'm a certified public accountant. If you need a CPA to do your 2024 business or personal taxes, you're looking at them. Book a free consultation with me. I'll talk to you for free. I'll go over your tax situation. I'll give you an upfront quote, and I will do your taxes probably cheaper than your CPA because it's just me by myself doing your taxes. No employees, no office, just me sitting right here. Book a free consultation. Coffee Z. He gave me a lot of super chats, so he got his video. Euros are disappearing and being replaced by Bitcoin. Well, I don't think the euro is going to be replaced by Bitcoin. Currency hedge international ETFs exist if you don't want to deal with currencies. I mean, but that can go both ways. You know, I mean, like if the dollar starts to weaken, it can actually help international. But so far, the dollar has been freaking strong, and that actually hurts international returns because they're denominated in foreign currencies. I just did an Echo stock analysis, and Google says it's a buy. Buy Google, bro. It's true. I made 17.6 million. Bitcoin allows instant wealth transfer around the world without asking permission. Can be private enough to hide whose it is. Isn't that crazy? It's not. It's on the ledger. It's on the blockchain. How do you hide on a blockchain? There's probably better ways to send money. Okay. Bum Spanka stock is questionable, but I'm sure Strongman owns it in DT, so hopefully it moons. Yeah, I don't see the moon. I'm sorry. But you never know. Maybe they're doing something that it's going to massively grow their profits. You're broke? Yeah, I'm broke. This is my third. So you got MicroStrategy. What would your other say? Peet's. and the Yield Max Index ETF. You're clueless. Okay, Palantir. There you go. You don't have silver like Jeremy? Come on, man. That's a great place to put your savings. You have an emergency? Silver doesn't fluctuate. What's their moat? I don't think this has a moat. Let's see. Fabio, have you had a full fall? Yeah, let's do some drama, Fabio. Well, you don't have more subscribers than me yet, so but once you have one more subscriber than me, it's game on, Fabio. Get ready. We are. I should do my 23andMe video. I'm Italian. Hey, hey. I welcome the hate. Makes me feel good. Okay. You're right. I was wrong about Fubo. I should have put all my money in it. Strongman, you're clearly educated and good to analyze this. Why do you not buy any individuals? Because it's about the future. Okay? Stock picking is not just about the financials. It's also about like the story and the narrative and the catalyst. Okay? The reason stock prices change is because like new information hits the market. You have to kind of anticipate the new information, whether it's going to be positive or negative. So if you see a stock and you're like, the market's missing something here. They're not seeing the positive catalysts. They're overly pessimistic on this stock. That's how you can make money. But like this thing could vertical line tomorrow if, news comes out that they, I don't know, are being acquired by somebody and it vertical lines like Fubo did. Can you believe he did? Can you believe that? Oh my God. Let's see. Why are you bringing up his silver? Am I defaming Jeremy? Oh my God. 3 million loss is more than the Fabio. Jeremy's a genius. Okay. Jeremy is a genius. Stop defaming him or Gil is going to sue you. Sure, but in the long run, don't you expect the better fundamental stocks eventually catch up? I don't know. I don't know what's going to happen. I'm serious. I have no clue. But the thing is, like, this is a very small percentage of VT, I would imagine. So if you bought like if you put this as 5% of your portfolio, you're like massively more concentrated in this company than the market. So the market's looking at this company and it's got a bunch of information that's determined the price of the company to be an 8 billion market cap. And you're massively overweighting it. So it's actually like really degenerate. It's actually less degenerate to buy big tech than it is to buy a small cap as a big percentage of your portfolio. I use ball trim. That's right. All right. Well, that was a sponsored video. I mean, you could super chat me. You can send me money. I'll cover whatever you want. I like doing reactions, stuff like that. That's what I enjoy doing, making fun of people, trolling. That's my expertise. Okay. But if you want to give me $50 and look at Pete's competitor, Skeets, then I'll do it. Anyway, book a free tax consultation. I'm a certified public accountant. Let me do your business and personal taxes for 2024. You can meet me and talk to me for free. What's there to lose, boyos? Talk to you later. Cheers.